Hi, I'm Dr. Drew, and welcome to my YouTube channel. This is a channel not on medicine, but on all the other aspects needed to live our medicine lives. Today, we're going to be talking about the concept of index fund. You hear about it quite a bit in the media, and it's essentially touted as the best vehicle available for building wealth. So, today, we're going to talk about what it is, why it's important to know, how we can utilize it. Essentially, an index fund is a type of mutual fund that aims to track the performance of a specific market index, such as the S&P 500 that we talked about before, or the Dow Jones Industrial Average that is shown here. The fund will hold a portfolio of securities that mirrors, that's the main concept, it mirrors the composition of the index that it is tracking. So in a mutual fund, essentially the fund manager or the mandate would be to buy the companies that make up that portfolio. And we understood from the previous videos that the purpose of the mutual fund is to diversify and reduce the risk associated with owning a single stock. Whilst an index fund basically takes it a step further and essentially tracks those portfolio of companies that are inside a mutual fund. So in this way, the cost of it is reduced. And it goes back to the analogy we used around, would you hold a basket of grocery goods, or would you hold a receipt that tells you how much is inside that grocery basket? You can imagine that carrying around a receipt is much less logistically in terms of cost, and that's essentially what an index fund provides. So the goal of an index fund is to provide investors with returns that match the overall market of that portfolio, rather than attempting to beat it through stock picking or market timing. Now, why is it important for physicians to know about this? Well, one of the main benefits is their low cost, as we talked about just intuitively. Because index funds simply track the performance of a market index, they don't require active management, which helps keep expenses low. It's essentially like cruise control or artificial intelligence, if you want to call it that way. And so you're leveraging technology to reduce the cost of the investment and reap the benefits, because we will have future videos on the effect of fees on investments. Additionally, index funds offer diversification depending on the type of portfolio that's picked, as they hold a wide variety of stocks from different sectors and industries, reducing the risk of a portfolio heavily concentrated in one area. Another advantage of index funds is their historical performance. Over time, the overall stock market has shown to provide solid returns, and index funds allow investors to participate in that growth. Additionally, index funds can provide a convenient way to invest in a particular market or sector, such as international stocks or technology companies, without the need for individual stock picking. I mean, Warren Buffett has basically said that this investment vehicle is so strong that you could essentially put 90% of your portfolio into the S&P 500 and the other 10% in short-term cash or bonds. And that's actually what he has recommended to his family, because it is truly passive. It requires very little effort on your part, essentially rebalancing once a year if you really want it. And as long as you know the pros and cons of this particular asset class and have the stomach for the volatility that comes from this asset class, you will essentially be able to get market returns, be an average investor, which is what your goal is, and not have to worry about the intricacies involved in money management. You can essentially stick to your passions or your job or your family during the day and know that you're making money while you're sleeping. So how can physicians use index funds? Essentially, there are, I think, about 1,200 or more index funds or mutual funds. I think it's 1,200 mutual funds and way more index funds that are available. Essentially, there's a lot of them out there depending on what your interests are. I mean, the classic ones would be the S&P 500 or the Total Stock Market Index Fund, or Dow Jones Industrial Average. If you're in Canada, VFV is the ticker for the S&P 500 in Canada. SPY is kind of more located in the US. There's also various iShares index funds like XUS, which would be anything outside the US stock market. So essentially, you can build your portfolio depending on what your investment thesis or philosophy is. So if you want to keep things simple, you could basically have a philosophy or optimism that the whole world is going to do well. You're going to hold the whole world stock market index fund. ACWI, or All Country World Index, is essentially another one similar to that, which is All Country World Index, as it basically says. This essentially gives you a portfolio of companies. And if you want to balance that with bonds, you could use XBB, which is the bond market of Canada. So this can provide a balance of growth and stability, and you can pick your asset allocation, like 80% stocks, 20% bonds, whatever it may be. So basically, that's why they call it the 2-fund ETF or the 3-fund ETF, which is essentially the one fund is bonds, one fund is your total world stock market, and the other fund is, I suppose, your play, like small value companies, or if you work in healthcare and you believe that healthcare is going to do well, then you can essentially buy a small portion of healthcare. Although you would include that, you'll be double dipping. So you already include that in your old world index fund. So the other approach to using index funds is buying international stocks or technology companies. So some people want to buy high growth dividend funds or emerging markets. So you're essentially able to buy that. So that's about just past 5 minutes. So in conclusion, index funds are a great investment option for physicians to consider. They offer low cost, diversification, and historical performance. It's important to obviously consult with the financial advisor to determine if index funds align with your specific investment goals and risk tolerance. Asset allocation or portfolio design does require due diligence on your part if you're doing self-directed investing, or you could use a robo-advisor to kind of balance it once a year or whenever, how frequent you want for you, or you could use the assets under management financial advisor done with you or done for you strategy. So hopefully that serves as summary in a world filled with information but not succinctness. A few action items. If you like to follow the exact frameworks used by affluent physicians to take back control of their time and money, then check out the link in the description below. I make these videos because my passion or my vision is to fight burnout in 10,000 physicians with financial literacy. This is my legacy for that. Come and join my free community of like-minded physicians in my Facebook group, where we share resources like cheat sheets, calculators, everything in between to live our best medicine lives. Thank you very much for watching. Thank you for providing service to your patients, and I look forward to seeing you in the next episode.